Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and my mission to help you guys own it. A wild day in the markets today. A lot of it was led down from Snap, providing guidance intra quarter to lower below expectations, which is what really kind of shocked the market, particularly within tech. And the Dow was actually down over 400 points at one point today. It's now in the green, up 0.25%. The S&P is trying to fight its way back. It's down around 0.5%. NASDAQ's down 2%. And so we got a lot to chat about today as well. Toll Brothers is going to be reporting earnings after hours. And I missed out on you guys yesterday because I was at a golf benefit tournament for Fat Man Zoom. And I actually have the man in the flesh right here. What's up, my man? Oh, I got you.
No, there we go. What's going on, guys? Did we do starting five?
We did not. I was going to give you the honors.
Okay, I should have it. Okay, cool. Starting five, we have Hector Godinez, Housekeeping, Tiger's Edge, Chris Topher, and Tracy H. Hector, I hope I got that right. That was a tough one. I actually called an audible. I was going to pronounce it a different way, and then I was like, Godinez seems like it's the way to go.
Yeah.
What's going on, guys? Listen, so the golf tournament was fun.
Yeah, ton of fun.
What's up, Snook? Steven. But I've come up on here and I've hung out a couple times.
Yeah.
But I need help because I have been out of the loop, admittedly. I know a little bit of what's going on, and we've talked a little bit about what's going on.
Yeah.
But I feel like the good thing about the Chaos Crew is I can get some information quickly. I got to buy some stuff. And it's time. I keep talking about it, but it's time. Another red day.
Yeah.
Things getting beaten up and down. You know, it feels like day to day, but I don't care. I really don't care. Things are beaten down so much that even if it goes down a little further, I still think a lot of these prices are ridiculous.
Yes.
So I don't want to go crazy and buy a bunch of different things, but I'd rather put a lot of money in a few things. So I want to know what we're buying and why, because I don't have enough time for due diligence.
Yeah.
So if you guys want to throw it in the comments, what should I be looking at? And tell me why I should be looking at it. Obviously, I'm going to be more inclined to look at like blue chip stuff. It's going to be unlikely I'm going to be that speculative. But, you know, Apple's always an easy one to go for. Tesla, especially with rising gas prices, like I feel like an EV, whether it be Ford or Tesla, be one that I've been keeping an eye on.
Yeah.
But even Meta, and that's what I'm a little bit challenged with because that company is just so weird, like in general with its leadership. So anyways, those are to name a few, but if you guys want to throw in some stocks that you're looking at or that you think I should look at, and you guys, you know, should by now understand who I am and like what's important to me. But typically it's going to be a blue chip. And it's going to be something that has staying power because this is a long term, and I'll just dollar cost average, but I got a ton of money and I'm in a really good position to leverage some of that capital. So what do you think?
I mean, you mentioned Meta, and I think Meta actually is a really good candidate to buy right now. I mean, $40 billion in free cash flow every year. And I keep saying that to you guys too, but like, it just can't be overstated. It's trading at 14 times next year's earnings now.
That's crazy. So do you think they start buying up a bunch of companies? Is that what you think, how they deploy their capital?
No, I think that it's I don't know how they're going to deploy their capital, but I think that they're still under the microscope so much that acquiring companies right now is probably not something that they're looking to do. I think that, you know, they've already talked about putting a lot of money into the metaverse, and I think that that's probably what they may end up doubling down on.
Yeah.
We'll see. And look, admittedly, it is the future. 10 years out, they're probably going to be a key player in that space. Obviously, Roblox comes to mind there too, but I think that's where they'll end up focusing a lot of their time. I just saw this today. Facebook, there 3.64 billion people are on Facebook. That's over half the globe.
Yeah.
Which is or about half the globe. So which is crazy. And so with a company like that, you know, could there be a slowing of growth? That only makes sense. But the way that they could distribute that capital to grow other areas of their business, I think is kind of where it's going to be at. But man, it's just crazy to see it down this low. You know, no matter how you feel about the company or how wonky they are, it's just stupid cheap.
Yeah. Housekeeping says just do Microsoft, Google, and a semiconductor. I feel like those are fine, but if I did three, I feel like just kind of all being in tech, I don't feel like they're diversified enough for me to go for those three. I would do Microsoft or Google. Not that they're direct competitors, but I think there's a level of competition there. But also, I don't know, like Microsoft's one. I'd rather have Apple than Microsoft, or than Microsoft in general. But those are all good companies. Obviously, any of the semiconductors, Nvidia's, I'm a big fan of. Scott Sherwood's buying Disney, which is definitely on the radar. And it's a good diversification stock. So those definitely should be interesting. So we'll see.
Yeah, Disney's come down. It's at 25 forward multiple. So crazy enough. I mean, even though it's come down a ton, it's still in the mid 20s. But yeah, trading at $101. I mean, we're down here in the lows of the pandemic at this point with Disney, and I would imagine that we see this start to turn around too. They're not going anywhere. One that I thought, if you're looking in the semiconductor space, we've been chatting here for the last several weeks and months about high multiple stocks. If you're into semiconductors, if you're looking at a semiconductor play, Qualcomm is definitely one. That is a great company, and they have plays in the metaverse. They also sell chips to Apple, and they have all kinds of demand here. They've obviously been in trouble with a lot of the other semis, but this has come down to just 128 or so. This is trading at 10 times next year's earnings. So, I mean, that to me, you were looking for good value. Yeah, AMD, Nvidia is certainly there, and they deserve the premium, no doubt. But this is also a pretty low valued stock right here in the semi space.
Yeah. Housekeeping also mentioned Crocs, which we talked about a bunch of times.
That's also trading at like 10 times.
Yeah.
4.5.
Wow, that's wild.
4.5, yeah.
And then Snookeroo mentions Rocket, which I know you wanted to talk about housing in general, and obviously Rocket plays a part in that space.
Yeah.
I mean, I think there's a time for like housing, and this is just like real estate conversation.
Yeah.
I've never understood since the pandemic, like how the housing market could maintain this trajectory and also sustain itself, given, essentially people squatting.
Yeah.
So I've always felt like there'll be some ramifications from that, or repercussions from that. And obviously Rocket, I think, has the model to do well. But I'm going to hold off on housing in general.
Yeah. A couple other good ones. Stephen Hoyer just makes his argument for Goog, says that streaming wars, they're still in the infant years of YouTube streaming. Yeah, I mean, YouTube TV is still exploding. When recession's over, advertising will come back stronger than before, and cloud services still have room to grow. And the stock split that's coming up in the next month or two, his argument there. Ivan Brodsky, JP Morgan. I think one of the banks is certainly, I mean, they've gotten beaten up big time. And JP Morgan could certainly be in that conversation. Also, they're trading around 5 times next year's earnings, and Bank of America also in that conversation too.
You have companies, and Alex Johns points out Tesla is still growing 50% a year. Forward PE is crazy right now. Isn't it like growing greater than 50% a year?
Last quarter it was 60, I believe.
Oh, was it? Okay. But that's a good point, is like, fundamentally, a lot of these stocks that were running hot have now, due to most of these companies' massive downturn, now they've actually look really good from a fundamental perspective. So a lot of people are scooping up some stuff that were, high multiples, and now they're available. Shouldn't we still be scooping them up? I mean, not blindly, but seems like a good opportunity.
Yeah. I mean, absolutely. If you liked Tesla at 1100, you're gonna love it here.
Yeah,
that's for sure.
Yeah. I don't know if you remember, but I sold Tesla, I think it was like at 775 on the way up.
Yeah.
And I had this plan that I was like, I had just sold my car, and I was going to put the payments towards buying one share of Tesla every month. And I wanted to get, it was like 100 shares of Tesla or something like that. But the the stock just ran, and I was like, I gotta take this. Like, it became unaffordable for me to continue to buy shares. So I'm like, all right, I feel good about 775, which at the time seemed a little bit silly, and it kept running, and I was like FOMOing a little bit, and I'm like, damn, it's 625. I need to get back in on that.
Right.
But it feels, good, because to your point, well, not for the stock to be at 625, but given the growth in the demand of Tesla, that's why it's hard for me to like go against it, because 625, man, I don't know. It just feels like a good spot. And if it continues to come down, I mean, could you imagine if it gets below $500?
Well, that's going to be the scary part, because I think that if we get below 500, and maybe even if we get below 600, the short sellers could really start to pile into this thing because of Elon Musk's conditions regarding his purchase of Twitter. So he basically essentially took out a loan against his holdings of Tesla, and he will get margin called at around 400 something. Believe it's 470.
Yeah.
So the lower this goes and gets closer to that mark, he will be forced to sell Tesla shares, which would be in a huge favor for any of the short sellers in the stock. So there is that risk involved with that. I think the lower that this does go, just in the short term, but to your point, fundamentally, it's going to be just fine. But if within the next couple of months, next couple of quarters, that starts to come into play, it could start to get really ugly for Tesla in the short term.
Yeah. I don't know much about that side of things and how it works to take a loan against your holdings, and then if it gets margin called, I got to imagine that he wouldn't let this may be blasphemous, but there's always a way to work around things. And I can't see him selling his shares, of stock. Like, and again, admittedly, this is somebody with no knowledge. Like, can you get a loan to sort of like mitigate the margin call, or find some sort of way to do that? Because he's very well aware of what happens when he sells his stock.
Yeah.
And especially if it's at a low point, everybody would freak out. So I don't like, there's got to be some mitigating sort of things that he can do in that respect. But here's the reality. I don't care about Twitter or any nonsense with Twitter. The company, EVs, Tesla leads the way. Nobody's even close.
Yeah.
Demand's high. Keep talking about Twitter. Stock keep going down. The company's going to be just fine. Production, I mean, didn't they push back Cybertruck again?
Yes, till 2023.
I mean, that's what you need. You need demand there, production. Like, you're working more efficient than anybody else.
Yeah.
Tesla's going to be fine, folks.
Yeah, I agree.
There was one other thing. No one is going to margin call Elon. I don't know, man. He's not making a ton of friends. I mean, we might love him in retail space, but institutionally, can't say that they love him.
And now politically.
Yeah. But we'll see what happens. Alex Johns, Tesla has 2 new factories, expanded China. FSD is making great progress. I'm not sure if they're making the progress people want to see. Stock split, etc. Anything under 1K is a great deal right now. Absolutely. And I think anything will be a great deal. It just depends on your time horizon.
Yeah.
What's your time horizon?
Yep.
Also, what's not off the table is crypto, whether it be Bitcoin and Ethereum. For me, that's another thing that is like, okay, when is the time for that?
Yeah, that's a great question. There's the speculation on Bitcoin, on where it could go. I've heard reports that it's going to 8,000. I've heard reports that it's going to 20K, back to where it was, close to those 2018 highs before it came crashing back down. But I'll say this, on the chart itself, it looks like it's finally found a base. This is just your Bitcoin right now. It looks like it finally found a base at around 28, 29,000. And it's held that support really well. Now, obviously, if it falls below here, could get a little bit ugly, but this looks really strong. And, if it just consolidates here for a while, I think this could be a solid area to add to Bitcoin for sure. We take a look at Ethereum. And that kind of having the similar move down and kind of consolidating around that 1900, down about 0.5%, but it's really kind of held its own around there too. So both holding pretty well, despite some of the drama we've seen, especially with Luna and some of the other safer cryptocurrencies that haven't been so safe. And so this actually looks like it's a pretty decent spot, and it's been holding very well between that one and Bitcoin. I think they're not doing half bad.
Yeah, the market's closed. Nordstrom has earnings today.
Nordstrom does have earnings today. Yeah.
Who else? Does anybody else big have earnings?
Yeah. So we have Toll Brothers that has earnings today, and this is going to be an interesting one. So April home sales came out. We kind of alluded to this earlier, but April home sales came out, and sales were down 16% compared to the prior month. The expectation was that they were going to be down in the single digits. I can't remember the exact number there, but that was a significant drop. And there's a couple of things that you could speculate as to why. One of the big reasons could be that interest rates have gone crazy. 5.25% is what the average 30-year mortgage is right now, and I don't know if anybody's looking to pay that much, especially when 18 months ago we were looking at mortgage rates less than 2%. And with this increase in interest, plus the 20% increase in mortgage or in home sales, or the price of homes rather, mortgages are up nearly 100% when you combine the interest rates along with the house of or the price of houses. So you look at that and you have to imagine that there's a lot of buyers out there. They're like, you know what? I feel like I missed it. I'm not going to go after something like this.
Yeah. Also, people are mentioning Inuit earnings.
Yes.
And I didn't know they don't have earnings, but Mad Dick said that Airbnb pulled out of China. I totally missed that.
They did. So some issues going along with China as far as regulations are concerned. They were just getting a lot of really bad relationships were made there. And on the regulation front, it was just too much to get over as far as that's concerned. But on the bright side, the revenue that was created in China only accounted for about 1% of their revenue.
Oh, wow.
Hasn't really impacted them that much.
Apparently Intuit's moving. I'm not sure how much that means.
So we have Toll Brothers right now. It's trading down around 0.5%, just to kind of give you guys the expectation so we can wrap up the real estate conversation. Toll Brothers is expected $1.46, $2.15 billion in revenue is the expectation there. Revenue for 2021 was around $8.4 billion. And then we're expecting 2023 numbers to be around 11.9. We'll see, obviously, what they say as far as costs are concerned, and if they're still able to pass this on the consumer. Obviously, with those home sales coming down, this should play an interesting role here in those earnings. Then we have Nordstrom as well. Let me pull up the chart there. And that stock is not going anywhere. It's actually down 2%, was down 3% on the day. Let me go ahead and see if we can pull up the expected numbers there on that. So Nordstrom and retail's been really weird. Foot Locker came in, they did really well in earnings, and then you've had other ones that just haven't done well. Their expectations here for Nordstrom is we saw Ross obviously shit the bed last week, which is really terrible. But looking at this one, a loss of 5 cents, $3.28 billion in revenue is the expectation. Right now, the stock is down about 1.5% now, trying to come back a little bit after the initial sell-off.
Intuit's earnings are in. Intuit revenue expected $5.52 billion. They came in at 5.6. Slight miss on earnings per share. Expected earnings per share were $7.60. Came in at $7.54.
There we go. Stock's up 3.5%. Pretty decent move there. Anything on the Twitter machine about guidance?
I'm getting mixed stuff. Some people are saying they beat on both. So we'll see.
Okay.
No, nothing on guidance.
Yeah, Intuit's moving pretty solidly here. It's up 4.75%. Having a pretty decent move. Don says you could say that Ross pulled an Amber. Yeah, definitely pulled an Amber Heard on that one. That's gonna be my reference from now on, Don. Oh man.
What's this? Do you know the story on the FTC settlement? Apparently there's a $140 million settlement
for Intuit. Yeah, because they were advertising free TurboTax and it wasn't really technically free. So that was kind of a settlement that they ended up having. I was kind of concerned about Intuit as far as that was concerned, to see if they were going to actually do some sort of write-off because of that.
Yeah.
That would bring the bottom line down, but no, but doesn't seem to have impacted them too much.
What's up, Boogaloo? What's up, Don Fran? I'll check out Nordstrom. Maybe they have some stuff.
Yeah, see some people saying that looks like it might be moving. Let's take a look here. Yep, and it actually just popped big time. Huge move on Nordstrom's, now up 15.5%.
Dang.
And climbing, now up 18%. Still going. Wow, what a move.
The board authorized a $500 million buyback. That came from the earnings.
Still climbing here. It's now up over 20%. So let's take a look at the daily chart while Fat Man Zoom's pulling up those numbers. Right now it's trading at 24.64 and after hours trading. And that is right about here. $25 going to be that next area of resistance. We see it move up over here towards 26, guys. And then we're starting to think about maybe a momentum shift, because that's right where the 50-day and the 200-day moving averages intersect each other currently. Stock was trading, near oversold conditions, right around 33 on RSI. So, there's definitely some runway here on Nordstrom, even if you guys missed this move. If it gets above that 250-day moving average, right at that $26 mark, this could have some potential and some legs to keep going, depending on what those earnings are.
Their earnings, you could say a slight miss on earnings per share. Earnings per share estimates were a loss of 5 cents, came in a loss of 6 cents. Revenue, they did beat 3.28 billion were the estimates. 3.47 billion was the actual. Obviously, they had the buyback, and their sales looks like their estimated net sales were 9.3%, and they doubled that, and it was 18.7%. Their net sales came in for Q1.
That's pretty good.
Yeah.
That's really good. I wonder, we've kind of been seeing what we talked last week with Walmart and Target, that shift in discretionary versus non-discretionary. I mean, clothing's still non-discretionary. You need to have clothes. And we've just been seeing the shift of consumer spend. And maybe this is one area. Obviously, these are higher end clothes typically. So take that into consideration. Maybe those who were middle to upper class probably still have pretty decent amount of cash on hand. So not much of a surprise, I guess, to kind of see them beat, but beat by that much is pretty impressive.
Yeah. Did Urban Outfitters have earnings today?
I believe so. I didn't know if anybody was actually interested in Urban Outfitters.
David Kim, maybe they're down, but
yeah, stock's down 5%. Stock right now is down 5% after hours. Now trading at $17.
So they both are in. So they missed. Looks like they missed on both. Earnings per share estimates were 42 cents, came in at 33 cents. Revenue 1.05 billion. Sorry, 1.07 billion with the estimates, came in at 1.05 billion. So they missed on both.
And there you have it. Yeah, this has just been a really weird quarter for retail, man. It's like either they knock it out of the park or they really do terribly. So it is interesting to see how these companies are navigating the inflation story and like this consumer shift in buying and everybody kind of going towards services rather than goods. It's just been really weird to kind of see some of one of the most unpredictable quarters I feel like I've kind of reported on. Okay, checking back in with Toll Brothers. Let's take a look to see how they're doing. Right now, the stock's up around 2.5%. As mentioned before, we were expecting some decent numbers out of them. $1.46 a share, expectation $2.15 billion dollars in revenue for the quarter. Toll Brothers was a Fortune 500 company founded in 1967. It's the nation's leading builder of luxury homes. So not quite like a D.R. Horton, where D.R. Horton is the largest home builder in the country, hands down. This is more for luxury homes. So they might actually do pretty well as we're looking at, where the consumers are spending, what kind of consumers are spending. If you have money and you're looking for a Toll Brothers home, you might still be able to swing it. But so far, stocks moving up here after hours is now up 2.25.
Yeah, I don't have anything yet. I did want to comment on what's up, Darren Anderson. NASCAR all out mentions a 30-year fixed rate. Hasn't been this high since 2009. I just want to make this point because I'm sure this is going to come up at some junction. This is recency bias where I feel like people are so used to low rates. Like getting a 3% rate was really unheard of.
Yeah.
Right. Yeah. Like, and for them to even fall below 3%, which many people got below 3%. I wonder how many people are getting comfortable with this idea and think that this is going to be the norm. What do you think the high for the average 30-year fixed rate mortgage has been since 1975? Just throw out a percentage.
11%.
Great. You're not close. It's almost 19%, 18.63% in 81. But it had a run up essentially from 1974 to 1981,
which was, by the way, the last time we saw inflation like this.
Yeah. And so, I mean, since that point, it had been a steady decline over time, but to expect like just sub 3% rates or to think that might get back there, it could get back there, but I wouldn't be surprised if it didn't get back there anytime soon.
Yeah.
And I think there's a little bit of like this recency bias where it's like 4.5%, 5% isn't crazy when you think about mortgages.
Yeah.
It's not that wild.
Right.
So we'll see how things play out. Certainly mortgage rates are going to be very interesting. And there's things that the government can do, obviously, to help relieve some of that pressure. But there's also the fact of the matter is, which is either they won't do something or they'll, like at some point you have to face sort of the repercussions for what happens.
Yeah. Which is interesting, right? I mean, I see that, is it Tahusker? Said my first mortgage was 8.75%.
Mm-hmm.
My only thoughts on that though too is that it was at 8.5%. It was also a different time. I mean, houses were much cheaper then, but also you were making less. So there's definitely an interesting dynamic. We'd have to draw some comparisons to see if it's even close to the times that we're living in now once you account for cost of living and all that.
Yeah.
We're also making more now, obviously, than we were back then. So it is interesting to kind of see how it all has been evolving over the 5 or so decades.
I mean, I don't know, like the time you're living in now. I don't know how much that. I think that's part of the problem. Is like, to me, everything's cyclical.
Yeah.
So to think that I'm not saying we're going to have 18% mortgage rates again, but why can't we have 10%?
Right.
You know what I mean? Like, as much as we want to try to have control of things, there's factors out of our control. And I don't think there's anything that's not cyclical. And just like we see recessions come and go, in historically, like most things have moved in a cyclical manner.
Yeah.
So, do I want things to get to 10%? No. But I mean, even 7% is high. Like, that's painful.
Yeah. Yeah.
And those are going to, if that happens, there's also going to be some ramifications about that, like with that. And so that's where, when we get stuck in, like, there's no different than when people are talking about stock prices going up. I think people have been of this mindset that housing prices only go up.
Yeah.
And it happened before the housing bubble, like 2004 or 5, 6. I remember when people would just buy houses and you could do stated income loans. And it was like, their mindset was housing always gone up. How housing always goes up? Like, how did it work out for them?
Right.
A lot of people, it didn't work out well for. It worked out well for the people that had money on the sidelines or had extra money waiting for when the crash happened. And 2009, 10 were great years for people just scooping stuff up. And the ones that had real freaking sets of cojones were like taking loans out against certain investments they had to buy more property. That wasn't easy back then.
Right.
So it'll be interested to see, because it certainly feels like all the stuff you mentioned with the Toll Brothers and the data on that is like, okay, well, are people going to start getting scared? And like, maybe there will be a time where pricing will come down, will level out. That could be the time. The time could be in the near future.
Yeah, I agree. Well, and to your point, like nothing goes up in a straight line either.
Yeah.
So there could be, and we kind of saw it with starting to see it a little bit with the treasury yields, that maybe we're starting to see a peak a little bit. And would it be that painful to see mortgages level out at around 475? I don't think so.
No,
not the way that, wages and everything else are going. I think we all could totally afford that. The average, consumer could totally afford 4 to 4.75%.
Yeah,
on a mortgage.
Don Franz says land always goes up. The improvements on land does not. I mean, there's also factors in that.
Location, right?
Yeah. I mean, I got some examples for land not going up around here.
Yeah.
But also improvements land is usually the biggest factor in valuations of houses going up.
Yeah.
Right. But another factor we're competing with now is, supply chains and materials cost. And that does affect, the improvements as well. But yeah, I mean, I don't want to get into the specifics about valuation, but land is where you make your money. Like when you really win, it's land. It can be improvements, but you got to be adding bathrooms and investing, like, bathrooms, bedrooms.
Yeah. Kitchens.
Yeah.
That sort of thing. I still don't see the numbers out for Toll Brothers yet. Have they been released? Stock's been kind of a little all over the place, I guess. It was up as much as 2.25%, and now it's up 0.25%. I don't think that those numbers are out yet. Okay.
I don't see them.
So let's just recap some of the other stuff. And while I'm recapping, guys, make sure you're putting in your over-under stock. So put in over-under and your favorite ticker. And then we'll get on to towards the end of the show. Once I see some of those in there, it might just show up. If you guys are curious as to whether or not I think that your stock is overvalued or undervalued, make sure you're putting it in the chat, over, under, and your favorite ticker. And it might just show up at the end of the show. Looking at, let's just check back in with Nordstrom. So they came in, and correct me if I'm wrong, they beat earnings, right?
Yeah, they did.
And revenue, and they actually came in pretty impressively with revenue.
I think the buyback is the big news.
Yeah, was just about to say that. So $500 million buyback, which is pretty big for a company that only has a market cap of around $3.3 billion. So pretty significant there. And stock's up 8%, shot up as much as 20%, giving back some of those gains right now. And we'll see. We'll continue to keep track on this throughout the stream. But so far, so good on that. A couple other ones that also reported earnings. Intuit had pretty decent earnings as well. The stock is up 3 1/3. It got up as high as around 7% after hours, but that's your move there on Intuit. And then Urban Outfitters, somebody had asked about that, and that stock didn't do well. Actually missed on top and bottom line, missed on earnings per share, and then the stock is actually not reacting too poorly. It was down quite a bit, down to $15 after closing at around 18. Now trying to go positive here. It's only down around 0.75%.
John Berger said Snap got snapped in half.
Literally. Yeah, look at Snap. So guys, if you're curious about my thoughts on Snap, I'm actually putting out a video this evening along with my expectations on Nvidia that I'll be reporting tomorrow. But Snap, I mean, just really didn't do well. And honestly, look, I have good feelings about this. Not from, obviously they came in and talked about how they're going to miss revenue expectations, and they kind of misjudged how fast the landscape has been changing as far as ad spend and everything else. But for them to come out intra-quarter, so in the middle of the quarter, and say, hey, listen, we kind of misjudged this a little bit, I think that I actually have some respect for that, rather than just letting us wait till the end of the quarter and then like springing it on us. I kind of feel good about this. I mean, it'd have been nice to hear that from Target when they knew about it way back in March. But it sucks. It feels bad but I think that there is going to come a time where Snap's going to be a really good buy. I think there's a little bit more pain involved with this one. Maybe it comes down to $10 a share. That's kind of where I'm expecting Snap to come down to. I thought around 1330 was going to be that spot, but then ended up breaking right below that. The weekly chart is very interesting. So this is your weekly chart. Each one of these candles represents a week. This was down as 42 back in 2018. Back in 2020, March of 2020, this came down as low as around $8. And then, but before then, pre-pandemic, around 2019 to the beginning of the pandemic, this went from 1048 all the way up to around $20. And so I think that, with it trading down here below $12.81, you have to ask yourself, is Snap worth less now than what it was back in January of 2020 before the pandemic hit? My answer would be no. And obviously TikTok is much more popular now, and it's taking a lot of money and revenue away from them, but Snap isn't going anywhere. And I think that with 500 million users, this is still a stock that's very much in growth stage. So, I wouldn't sweat it. I think that it does come down a little bit lower, but I would be scooping this up in the near future. I would say.
Snap's interesting because when you think about, first off, it's got to be frustrating being in the C-suite of Snap, because they were kind of first movers in the augmented reality, and they had this clear plan as far as like being first movers in augmented reality and leveraging that. And how quickly everybody shifted. You got to be frustrated because the longer, Facebook stayed Facebook, and the longer Twitter kind of leaned on what they did, like, and even YouTube, the longer that YouTube kind of stuck to videos and didn't try to get into the shorts, whatever, the better for Snap. And everybody just kind of like turned on a dime. And now it feels like, with everything, especially going on with Meta, looking at augmented reality, looking at the metaverse, like, you got to be a little bit frustrated, because now again you got to think about how to reinvent yourself. The challenge that I see for them from a longer term perspective, when we look at social media, the platforms that are dominant for the youth, which Snapchat, you would say, is right up there with TikTok.
Yeah,
I would imagine.
Yeah,
always struggle when the youth like sort of moves on,
right? Yeah,
or gets older, and the next generation doesn't want to pick up that platform of their parents or of people that are a little bit older.
Yeah,
and I don't know how that works for Snapchat. And so, like, you look at Instagram, and Instagram's done a great job of, it's still a social media platform, but I would argue that it's more of like a merchandising platform or something like that, right?
Yeah.
Like, it's more shifting to like a commerce platform, or at least a lot of the growth can still happen from a commerce perspective. Businesses leveraging there. I don't know what Snap's going to do. It could do a commerce style, but I don't see, like, I worry that the next generation isn't going to pick up on Snap. It's just going to be sort of a niche thing for the younger people as they grow, like, whether they want to keep it or not. I mean, Facebook used to be the shit. Let's not forget about that.
Yeah. Well, and Facebook capitalized on that growth, right? And continued to roll with it. Don brings up a good point, says they don't monetize that well at all. And Snap's been around for a while, and they haven't really been able to monetize like you would have hoped they would have been able to. Like, they're sitting on decent free cash flow. It's around $200 million on a company that's traded, that's with a market cap around $4 billion.
Yeah,
which is not bad. But you look at something like Facebook, that's just a behemoth, and they can get through some of these peaks and valleys where maybe Snap struggles with that. And I still don't think that they're going anywhere. I think that they do have room to innovate, and maybe they do. I mean, some of the trends that you see, especially with like these hilarious filters all the time that trend like crazy, most of them are found on Snapchat first, and then they just go all over the place and trend everywhere else. So maybe there's a way that they can capture that and somehow figure out how to monetize that part of their business. Who knows? But I don't think that they're going anywhere for a while. But yeah, this is going to have to be a time that maybe they'll have to consider pivoting.
Well, I mean, I can't say that many social media companies can say that they really monetize well. Twitter,
yeah.
I don't even think that TikTok could say that it monetizes well. It's just hot, like, and it can continue to grow. But you look at how much money companies are paying out. The people that benefit are these large influencers that are getting money from companies, but those companies can move wherever they want to move freely. I don't know. Like, again, that's why I say from a longer term perspective, when you're talking about years timeline, but it can happen pretty quickly. Like, change can happen pretty quickly. And I'm sure Snapchat's aware of it and they know they've got to do something. Filters is a good idea. I mean, again, I would also imagine a lot of these companies are saying, how do we get some of this money that's been thrown to our people, right? Like YouTube, either let's say YouTube stars, the amount of money they're getting is ridiculous. TikTok, the amount of money people are getting, and Instagram, the amount of money people are getting, and I'm sure it's happening on other platforms as well. It's insane. And these platforms are gonna have to find a way to get a piece of the pie, because I can't just directly go to these, to these influencers.
Right.
Not a sustainable model, I don't think. But Facebook shifted. They went to groups, they went to Facebook Marketplace, and they found a clear delineation between them and Instagram. And I think they each carved out their own lanes. So it's definitely possible. And Snapchat could do it. And I'm sure they're already formulating ways to do it.
Yeah. I'm sure there's things that they're working on that we just don't know about. So good stuff there on Snap. I saw somebody, there was a direction I was going in. Oh, AutoZone. Bodie, we were talking about AutoZone. AZO, they reported earnings this morning, I believe. Yeah, stock actually did pretty well. It's up 6%. Looks like they beat revenue estimates. This doesn't come as much of a shocker to me, but stock did pretty well all day today. This is one that we've actually been watching for a long time, and it's been on the watch list for quite a bit, which, by the way, guys, if you're interested in checking out the watch list, make sure you go to ownthechaos.com. You get that free watch list and go sign up there, become part of the crew. Would love to have you guys there. Link is in the description, or you could also always click on that join button as well and join our level 1 crew. Would love to have you guys there too.
I got nothing.
Yeah, they had earnings this morning, so it looks like they did pretty well. Stock's up, closed up on the day around 6%. Not much of a surprise there, but Bodie Beard looked like he wanted me to cover that, so I ended up doing that for you, my guy. All right, so let me go ahead and cover some of the over under. I see a couple people put them in there. First one I saw was Airbnb somewhere. I might have skipped it already. I might have passed it.
Don did ask about Snap, but you alluded to, you thought it was undervalued, right?
I thought Snap was overvalued still.
Oh, did you? Okay.
Yeah, because just from a multiple, it's still trading at 40 times almost.
Okay.
Even with the crazy move down. So yeah, we could start with that. Snap. I mean, I think Snap is overvalued still, just from a fundamental standpoint, and it sucks to say, and nobody wants to really hear me say that, but I mean, it just is. It's trading at 38 times next year's earnings, even with a big move down on this, and it's down, I believe, around 70% on the year. So this is a classic example of, just because it's come down this far doesn't mean they can't go down further. And I think that there is a possibility that this can come down. Watch for that $10 mark. It's still going to be at a pretty decent multiple at $10, but it'll still be cheaper nevertheless, and it'll be good psychological support there. If it can hold there, I think that maybe it'll be worth taking a look at for Snap. So pretty good one there. Somebody, I couldn't find the comment, but somebody asked about Airbnb. This has been tough too. All-time lows is hit today at 103.74. This is really disappointing. I got to be honest with you. This is one of my highest conviction stocks. It's just not doing well, and I really can't give you a good explanation as to why. It's got a high multiple, sure, but money is flowing into travel and into hospitality services, that sort of thing. So it's just kind of a little bit of a head scratcher to see it down here. The only explanation that I can give is that it does have a high multiple, but to me, I think the growth story here is worth paying a premium for, and so I'm going to continue to stick it out. Is it overvalued? I think that if you look at the numbers on paper, it is overvalued. But like I said, there are certain stocks that kind of are exceptions to the rules because of the way that they are growing. And I think that Airbnb has the ability to, overcome that multiple because of the way that they're growing. And every one of their earnings that they've been putting out lately has just been absolutely phenomenal. So I'm still going to stick with it. I think that it's slightly overvalued, but I still think that it's worth hanging on to.
I just want to say this about Airbnb. Talking about this, we sort of like using the opposite example of like Snapchat and the struggles they face, and how do you evolve? How do you differentiate yourself? I think Airbnb is on the other side of the spectrum where like, obviously they want to continue to grow, but like they have a ton of opportunities to create more revenue models in the future. Cause like you think about this one, who's their competition? Obviously hotels could be
Booking,
but like Verbo, like there's not a ton of competition. And like, it's hard for competitors to get into the space anyways. So if you got that to your advantage, then it boils down to how do you increase revenue? And think about, first off, how many people just say, hey, I'm going to rent something and Airbnb it out? That just increases like Airbnb, these things.
It's a household verb.
Yeah. And so on top of that, do they get into like Airbnb could find a way to monetize the cleaning fees.
Yeah.
Right. Like how they do that. They could also, they have the Airbnb Plus. So like they can do consultancy. So there's a lot of opportunity for not only an Airbnb to continue to grow where people adding, being adding to the platform, but really to increase monetization opportunities, because I got to look at those cleaning fees, which like we hate as customers, and be like, how do we get a piece of that?
Right.
And that's not a hard thing to get a piece of, like getting preferred vendors, cleaners. That's more revenue that Airbnb can generate fairly easily and quickly.
Yeah, I agree with that. They just updated their interface too about 2 weeks ago, which is kind of cool. You get to select different types of houses. So you could, there's categories.
Yeah.
Shared homes. There's this, oh my God, section, which has some like really funky looking houses. You could be camping, bed and breakfast, tree houses. So like this is just makes it even more streamlined. None of the other competition has something like that where you can just narrow down the type of house you actually want. So they continue to innovate in that way too. It's obviously been a struggle, but I really do like the stock regardless of where the price is at this point.
Yeah, and don't sleep on the experiences.
Yeah.
And don't forget, when you think about the experiences in the property, their business model, think about like whatever chain, Marriott, Hilton, like they own those properties.
Yeah.
Airbnb has all the upside of owning without having to actually own the property.
Yeah.
And the experiences, zero cost to them.
Right.
They're just the middleman. It's a beautiful model.
I agree. John, I gotta be careful how I say this. Keorkgi asking about CENX. CENX. Oh, thank God it's not some off the wall penny stock. This is trading at around 3.9 times next year's earnings. Is at $1.8 billion market cap. This is in the aluminum space, and it has come down considerably. I think aluminum is still very in high demand. Look, a lot of the raw materials are, but obviously supply has been really been hammered because of the war in Ukraine and Russia. It's reached a level to where now, yes, I think it is undervalued. I like it here at this $11 mark. It's obviously held above that pretty good. Just looking at the chart, it looks pretty darn good. I mean, this is your daily chart. It is very oversold, still oversold conditions at 31%. This was down as low as, wow, 17. So, yes, there you go, John. It's undervalued. I like CNX here. One that I'm going to bring to the table that we haven't really talked about a whole lot today because I haven't seen it too much engagement on over-unders for the day. I'm just going to go ahead and cover Zoom. We haven't really talked about it that much today. But Zoom came in with really impressive earnings. And if you guys called my Stock Watch Sunday, I talked about Zoom finally being at a point to where I think deserves to be bought up. And it was rewarded today. It actually, yesterday, after hours, once they reported their earnings, the stock was up as much as 20% at $107 per share. And then the Snap news came out and killed everything in the market. So obviously there's that. But it still ended up closing up today about 5.6%. And they came in and beat on earnings. And they came in about in line on revenue, but then came in with some pretty decent guidance as well. Zoom added about 24% more new accounts to their platform, and they just continue to crush it. About 300 million streams a day that are active, and the stock just continues to do well. Obviously, it got ahead of itself back when it was at nearly $600 a share and even $400 over last year. But I think we're finally getting to a point. Seems to have bottomed out at around $80, and this is a company that has everything you want: profitability, growth, a double-digit growth, by the way, and I don't know what my third point was, but either way, in this environment where you're looking at high multiple stocks that maybe have been overvalued, this is one that actually isn't now. This is trading below. That's what I was going to say. It's trading below where it was pre-pandemic. So all that growth they experienced during the pandemic, and now we're trading back below those pandemic numbers back, in early February levels for Zoom. I mean, 26 times next year's earnings, not that crazy for a growth stock right now in the tech space. And I just think that we're finally to a point to where Zoom's actually pretty attractive. And after all, it is the Zoom and Fat Man Zoom.
Hell yeah. So you're saying I should have waited and not got it at $400?
Maybe so, but now it's undervalued. I think that Zoom deserves to be bought up. They're not going anywhere. There's a lot of arguments that were made on Sunday about how they're a one-trick pony and there's too much competition. And I was like, I don't think so. I mean, the enterprise side of the company is just killing it.
Yeah, it is. I actually don't know what my cost basis is on it. It's
not $90.
It's not here. It's not at 400. It's not here. But that's why I've never sold it in my long terms, because I just don't. I don't see. I don't want to say the competition, because there's competition for sure, but I don't see them unseated. I see their continued growth. We still haven't talked about like the hardware side of things, and thinking about as people move away from remote work, that benefited Zoom. And I think people still use that, so you won't lose it. But I'm wondering how much that transitions into more enterprise sales, larger industrial companies. Like, as you know, a big key, I think it was like enterprise over 100K or something like that.
Yeah.
As your employees come back, what are they going to want to use? Are they going to want to use Teams? Or are they going to want to use what they've been using this entire pandemic? And I think there's going to be some pressure on these enterprises to adopt Zoom, because of how much better it is than everything else.
Yeah, they have almost 470,000 paying business customers. That was before their earnings that came out on Monday. So, I mean, that's just incredible growth. And to your point about Teams, it's like anybody who I've talked to that uses Teams absolutely hate it. And the only reason they use it is because they have to.
Yeah. So that Google Hangouts, the only thing I could see that could really unseat it at this time. But even Google Hangout, it feels like, I don't feel like they're really trying to target enterprises. It seems like they're trying to target individuals. So I don't even think that would be as much of a concern for me if I was Zoom.
Yeah, I mean, Facebook tried this during the pandemic. They tried to compete with Zoom, and nothing came of it. So, I mean, I think that there's a lot of companies out there that'll try to dethrone Zoom. I just don't think that there's anybody out there that does it quite as well as they do. This feels like early innings of like what Netflix did.
Yeah, it does, and it's only going to get better. And it was smart of them to look for other opportunities. I think it would have been very easy for Zoom to just rest on their laurels and be like, we'll be good. We're better than everybody else, and everybody's at home, so like we're gonna kill it. Like, they moved for the phone and the hardware. They were doing that while they were booming.
Yeah.
So I'm thinking that that could be a huge bet that pays off for them as they start seeing growth in those areas.
Yeah, I agree. I really like it down here at these levels too. It's good stuff. Over under on EVgo, Daniel Cecile. EVgo is one that has gotten absolutely murdered here. Now it's still trading down below the 200-day moving average. If you guys don't know EVgo, I believe this is the charging one, right?
Mm-hmm,
yeah. So another charging play, obviously with competition with ChargePoint and some others, but this is trading still for a loss. They're still operating for a loss. This might continue to be in the doghouse. I don't know what they're looking like as far as growth is concerned, but Fat Man Zoom brought up a good point with Tesla earlier in the show, just about how high gas prices are, and this will eventually force consumers' hands into this space. I think that there is some good long-term potential for something like an EVgo. Right now, though, it's hard for me to say that it's undervalued So I'd have to go and say that it's overvalued right now. And I think that maybe it becomes really attractive at this $7 level. So not too far to go if it comes back down to that spot around $7.
Do you think that any administration, that's not just like, I'm not trying to point out to this administration, but any administration would have more of an incentive to, or would be more inclined to provide incentive to push people towards EVs or to address rising gas prices?
I think rising gas prices. Let's just say that this was a Republican administration and we are where we are right now. Like I would say that you still have to do it both ways. I mean, and even Elon Musk has talked about this. Like gas prices need to come down because the infrastructure isn't there to have full implementation of EVs across the globe, and not even in this country. So I think that there needs to be some of that pressure alleviated. I don't think that they need to go crazy and bring gas prices down below $1 again, but they got to at least try to cut this down by a third of where gas prices are right now. And right now we're at net exports again. So, I mean, I just think that there is things that can be done and things that should be done. Whether or not they do get done, obviously, is anybody's guess. But yeah, I mean, I think that no matter what party was in office right now, especially with midterm elections coming up, you would think that if you're looking to get voters, that you would probably try to ease their pocketbook a little bit leading up to the elections this year.
Yeah, I mean, I just think if I'm in an administration, I would use this as an opportunity just to push more towards EVs.
Yeah, but that was Biden's whole plan. I mean, he said that from the beginning.
Yeah, well, so I'm wondering well, again, I'm out of the loop, so I haven't heard of him doing anything to alleviate rising gas prices.
He's released millions of barrels of oil from the SPR, Strategic Petroleum Reserve, but that's kind of been the extent. They've talked about licenses or leasing on federal lands, increasing that, but I think there's a lot of loopholes to jump through. So it hasn't been as easy as perhaps maybe they've been talking about, but and obviously with the net exports being that we're sending out more oil than we're actually making, it certainly puts a burden on a lot of consumers in that regard.
Yeah, I don't think anybody anticipated gas prices being this high, but I wouldn't be in any rush, especially if I was Democratic. Like I wouldn't be in any rush to address it, because I think you still have a little bit of time where you could almost push like, hey, this is why we said you need to get to EVs, and there will be a point where whoever's in the administration will have to address it. But I think
the problem is that there isn't a whole lot of EVs to buy.
Yeah.
So like
that's true.
Continue to push it, but there's the supply chain problems are such a mess that it's like people want them and then they can't buy them.
Yeah. So it'll be interesting to see kind of how that plays out.
Yeah.
But I just wonder, like, you don't necessarily have to be in any sort of rush. There will be a time, but I don't know, like, it's ridiculous, some of the prices, but it's almost like when you look at social media, it's almost people are using high gas prices, like how much they pay, like not outrage, but more like, look at how much I paid. Does that make sense?
Yeah.
Like almost look at it as like a show off tactic, where at some point the rubber meets the road and they're going to be like, this is BS.
Yeah.
It doesn't feel like people are as outraged as I would assume they would be, given how much they're spending on gas.
I mean, I've definitely been like thinking about having to drive certain areas, but I haven't gotten to that point to what you're talking about. But like, I'm starting to spend $400 a month on gas, and I'm like, this is ridiculous.
Yeah, that's crazy.
Yeah.
Philip Stroh bought a motorcycle. That makes sense.
50 miles.
That's why I bought a motorcycle. Yeah, you can buy some mopeds if you live in a city.
That's right. I like that. All right. We'll do one more. Let's do one more over under here. I thought I saw a good one. Eli Lilly. Oh, I like this one. Over under on Eli Lilly from Melanie Hutchinson. What's up, Melanie? She's an everydayer. It's good to see you in here. LLY. This ticker has been on an absolute tear, right? Healthcare has been one of the stronger sectors. It's been healthcare, it's been energy and staples, some of the really, no-brainer type stocks in this environment that have gone up. Looking at this one, this is trading at 36 times next year's earnings with a market cap at 300 billion. We're starting to get back to those all-time highs at 312. As crazy as this sounds, I think that this is overvalued, but it doesn't mean that it can't keep going. And I think it does actually keep going here. So it's overvalued with a little asterisk. So looking at this 312.95, a break over that probably sends this higher, and the demand for healthcare probably continues to move as well. I mean, we're still in a really difficult time where there's been a lot of folks that have ignored routine checkups and that sort of thing from being at home and having a lot of anxiety revolving around COVID. So I think that a lot of that's going to catch up with folks, and that's going to continue to push a lot of these healthcare companies up higher. We've seen that quarter after quarter now over the last couple of years.
We love you too, Melanie.
All right. Guys, that's going to do it for us. So thanks so much for tuning in. I'll be back here tomorrow at 3:45 p.m. Eastern time. We got some pretty good earnings tomorrow. So Dick's Sporting Goods reports pre-market. We also have BMO, a couple other ones that are a little bit of no-namers. Express, I guess, is in there. But then we have the big hitters. We got NVIDIA, we have Snowflake, Splunk, Dropbox, Williams-Sonoma, some really good names that are going to be reporting tomorrow afternoon. And so make sure you guys are tuning into that. Hit that thumbs up, hit that notification bell, because we will be live at 3:45 p.m. Eastern time to cover those earnings. It was good to have you here, big guy.
Good being here, guys. See you in the next one.
All
Bye.
Right. Bye.